Hi guys, this is Harry Yotis. I've been a professional trader for 20 years now. I started in 2005 working for one of the big banks here in Canada, and for the past 10 years I've been trading my own account. So let's get started with the daily update for Wednesday, December 3rd, 2025. This is a chart of the S&P 500 daily chart, and this candle right here is Wednesday, the 3rd. As you can see, bullish candle. We continued the up streak. Of course, we usually like to talk about the technical picture, but what really caught my eye today and what will be the main subject going forward is Carvana. Carvana company. Okay, now Carvana, as you can see, up flirting with the highs. Okay, very good stock at the highs, has been going up since literally 2023, 2022. Okay, we'll talk about that later. First, we always talk about the S&P 500 and the technical picture. Okay, so obviously still bullish. Okay, I'm going to reiterate what I've always been talking about for the past, I don't know, forever it seems. We're in a bullish pattern. Okay, we can bring in the moving averages. This is the 50 is the red one. We are hovering above that as anticipated for the past week or so. This is very good. It satisfied my criteria that it has to stay, this move has to stay above the 50 for at least a week, preferably 1 to 2 to 3 weeks would be nice. But as of today, it satisfied the criteria. We were worried when it broke down below the 50 that this uptrend is broken. But we kept saying that there are many times in the past where the uptrend here has been broken for a couple of days, a week, here 2-3 days, here a little bit longer before going up to highs. And this, of course, was the 22 bear market. But this fear that we had, or concern of this trend being broken, was quickly alleviated in a week after this bearish consolidation pattern, a bearish engulfing candle didn't pan out, and now we're trading above the 50. So we are bullish, technically speaking. And the one caveat that I have is that we have to go above 685 level so we can break this series of lower highs. I think we did it because this one is broken, okay, technically. But I would like this middle one to be broken, and of course, obviously, going to new highs, expecting for the year end between 700 and 720. Okay, so the picture, technically speaking, is bullish. Okay, but today, what really spooked people in the beginning was news pre-market on Zero Hedge. We can get it anywhere. Futures tumble on report. Microsoft lowers AI software sales quotas. Okay, so we'll explode this candle here to a 15-minute, 10-minute, to show you like pre-market. This was the beginning of the day here. Like, as you can see, it was going higher. It opened up lower. This was the opening candle. Okay, so it opened up lower, but then went up the whole day. So this is from 9:30 to 4. Okay, so it was because here, let's go back to the daily. It was because, Microsoft lowers AI software sales quota. It was a rumor. Minutes later, Microsoft stock rebounds after Microsoft refutes the rumor. We did not lower AI software sales quotas. Okay, so they're just playing games here. And that's why it opened up lower, but then we finished higher and everything is okay. So let's move on to the main event, which is Carvana. So today, Carvana has made an awesome move coming out of this downward trend because of the Bitcoin capitulation, but now it's back at highs. Okay, so I'd like to do something different with Carvana today. Okay, because usually we talk about the technicals, but really as a trader myself, specifically my method does not really rely on technicals. It just uses them to confirm the fundamentals. Okay, so what I would like to do is talk about a quick and dirty fundamental analysis of Carvana. Okay, so I like to use Seeking Alpha, you don't have to. Okay, so this is Carvana. Seeking Alpha picture. It shows you the chart here. And we all know that what Carvana is, fundamentally speaking. We have to know what a company does before we can begin. So Carvana is like the leader in this space. It offers like an online digital marketplace to buy and sell used cars. They've like digitized everything from like the insurance to all the paperwork that you have to fill out. So it really has a lead compared to its peers, okay? But the first thing that I would like to do, and remember the caveat, is that this is a very quick and dirty fundamental analysis of Carvana, okay? You would want to go much more into depth, but the first thing that I like to look at are the financials, and specifically the income statement, okay? I blew it up so that you guys could see, but this is the income statement on an annual period. You could go to quarterly, okay? So it gives you the last quarters here, but let's just go annually to see, okay? So as you can see here, these separate into columns and rows. We're going for December, which is the year end of 2015, 16, 17. So you have like 9 to 10 years of data here, okay? And what you want to see, the first thing that you want to see is the revenues here, the top line, growing, okay? As you can see, from 130 million, it grew every year, maybe except 2022, 2023, a little bit of a dip, and then back to new high. So revenues are continuing to climb on a, like you shouldn't, like here's the chart, you can see just visually that this company has been growing revenues, okay? That's the first thing that you want to see. And also gross profit, okay? So you want to see that the gross profit figure is also climbing, and it is. It went from 1 million, 2 million, 21 million. It's growing very, very fast in the past 10 years, all the way to 3.9 billion. So this is exactly what you want to see. The profit from operations is going up over time, okay? And that's the most important, okay? Then you have the expense, yeah, not just profits, but then you have the expenses. Them too, they're growing up. They're going up. So the operating expenses are here, and this is the operating income, okay, which is not just the revenues, but you have all the expenses like selling and administrative, depreciation, all that is in this operating income, okay? As you can see, they've had losses in 2015. Those losses were getting deeper, okay? So they were losing a lot of money. Even though their revenues were increasing, their expenses were increasing faster. So they were losing money all the way to December 2022 when we had that bear market, okay? But then slowly, boom, it's losing way less money in 2023, profitable in 2024, and even more profitable in 2025. This is a turnaround play, okay? So for years, you're seeing operating income going down, accelerating downward up until December 2022. Remember these dates. And then turning around and going higher with final profitability happening in December of 2022, okay? So all of this, you have other expenses too that are non-operational related. So it all comes down to the bottom line, which is the net income figure, which is here, the most important figure. Oops, it's this net income, okay? So net income over the years, okay? As you can see, it lost 37 million in December 2015. It kept losing a lot more money with a huge loss in, unusual item is the main thing that happened here, but all the way into December, huge losses, and then net income started coming back, okay? So you had net income coming back fully in December 2023, dipped in 2024, but then all-time high net income in trailing 12 months. We don't have it yet, December 2025, because we'll figure that out. We'll find that out in January or February of 2026. Okay, so the trailing 12-month figure is looking very, very good. Okay, so this is the most important thing. You want to see net income and or revenues, as we mentioned, up high revenues, operating income increasing, and net income increasing as well. Okay, remember, it kept losing a lot until December 2022. Okay, so let's go to the chart to see how this is represented in the chart. Okay, so as you can see, forever losing money. Okay, we had the 2020. This should not have happened because whatever you want to say. But let's say it's been losing money, especially in the bear market from 2022, and the stock price reflected that. Okay, it went from a high, the pandemic high of 360 something, 375, all the way down to like $9, $6, $7. What was the low here? $6, even $4 at some point. Yep, $4. Like a 90, what is it? A 99% drop. Very rare to see that. It almost went bankrupt. And you can see from the financials, it was losing 1.5 billion in 2022. But then you see December 22 was when the low was, and then it started making money in 2023, by 2023. So look, in December 2023 was right here. Okay, let's go to this place right here. So December 2023, let's put an arrow. Okay. Where is December, August? Here. December 2023. Okay. This is when it made money officially on the books. Okay. But we found that out probably a month or two later. Okay. But as you can see, the stock price started going up before that. Okay. So people knew that Carvana was starting to turn around and they were buying. Okay. So what I'm trying to get to here is that the stock price, all these little squiggly lines on the chart and the price going up, it's because it made a turnaround in 2023. Okay, as you can see from the income statement. Okay, net income, 2023 started turning around and making money, and people recognized that, and that's when they started buying it and taking it back up to these halcyon highs of the 2020s, stimmy fueled, inflation type of money printing that put this stock up to the highs in 2020. But it was still losing money here. This was just liquidity fueled. But here it's more real, okay, because it's actually started making money. You can see quarterly the earnings were green here, even though less here. Okay, it started actually turning a profit in November 2023. Okay, and then here, no. But then everywhere else, the profit started coming in. Okay, in 2024 and 2025, everything here was profitable. Okay, as you can see from the green earnings. So just to show you that fundamentally speaking, this should have gone up, and it did. Okay, so we can look at the balance sheet and all that. It's getting a little bit long and crazy, but what you really want to see is how it operates given its peers. Okay, so I set up something here talking about the peers: AutoNation, Cars, and CarMax. Okay, so Carvana here, you can tell it's the orange line. It's operating. It's much higher than its peers. It's much higher than AutoNation, Cars.com, and CarMax. Okay, now why? Okay, let's ignore all this stuff. Okay, forget valuation. We don't care about valuation. As traders, we actually seek companies that are highly valued. Okay, so here, the most important thing is the revenue growth going forward. Look, compared to its peers, not only has the revenue growth year over year been fantastic, but the revenue growth expected in the future is going to be much higher than its peers. See, 33% compared to a paltry 2%, and CarMax is going to lower revenues in the future. Okay, and the other important thing to look at is the earnings per share here going forward. Okay, forward looking, we don't care about what happened in the past. We look forward, and look, it's destroying its peers. They're expected to increase their revenues their earnings. First was revenues, and now this is earnings by 100%. So compared to its peers, it's destroying them because everybody else is going to drop their earnings per share going forward. Okay, so, and you can see the profitability here. The gross margin is pretty good. It's not that great. Cars.com has better gross margin, but it's better than the other two. And look at the return on equity, 68% compared to 27% for AutoNation. Okay, so it's return on assets, return on equity, return on assets, return on capital, destroying its peers. Okay, and the last thing that we should look at here is, well, we have revenues here, It just shows you exactly that revenues compared to its peers. Okay, but the important thing is comparing the profitability and the growth going forward to its peers. Yes, it has a cash. It has a lot of debt. It has $5 billion of total debt. If you want to look at the balance sheet, but better than most of its peers. Even the net debt. If you want to pause and look at it forward, you can see another important metric here is the quick ratio and the current ratio. If it's above 1, that means it could sustain its high debts. And look, the current ratio and the quick ratio means that it's not in danger of going bankrupt anytime soon. Okay, so we can go over this even further. This is a quick and dirty example of what I would generally do. I would look at the financial statements, then I would compare it to its peers, and then I would dig deeper by going to the SEC filings and looking at the most recent quarterly report here, the 10Q, filed on October 29th, 2025. And if you click that, you can see like financial statements. You'll see the assets and you can see comparing it September, which is quarterly. The 10Q is a quarterly, so you're comparing it this quarter to last quarter. So it's just, you have to dig deeper into that. Look, we have the revenues here for the 3 months ended 2025 is 3.9, so it increased its revenues. We can go deeper into that. It's not important. I just wanted to show you guys a quick and dirty analysis of why CarMax is going up. Okay, it's because it's earning money. It turned the corner in 2023, and now it's ripping. This move is more justified, in my opinion, than this pandemic-fueled move. This is probably pure hype and expectations that never materialized. That's why it got crushed. But here, it's actually making money. Now, is it very overvalued? Okay, we can get into that later on about what I think about overvalued versus undervalued. But right now, I just wanted to say that technical analysis just helps with your fundamental analysis, which should be like 80-90% of what you do. Okay, so that's all that I wanted to talk about today, digging deeper into the fundamental aspect of trading, which is more important, I think, than the technicals, because when you have the fundamentals on your side, it looks like the technicals end up working out for you going forward, as it did with Carvana. So let's recap. S&P 500. I am bullish, and I think it's going to continue to get higher, okay? Especially since we didn't look at the sentiment. It's still at extreme fear. We have a long way to go. The market is sort of neutral. Not bad. And things are starting to get back into normal, except stock price strength and breadth is still at extreme fear. Yet market volatility has dropped, of course, as the market's going up, and the put-call options are at fear instead of extreme fear. So it's getting back to this neutral greed area, which is where I think things will head as it keeps going forward. And, well, that's it, guys. Thanks for watching. I appreciate you being here. Tune in tomorrow for another update. And if this helped and you like it, just like and subscribe. Drop a comment, of course, below, and I will get to it and answer it as soon as I can. So looking forward to tomorrow and the end of the week and what this market brings for us. Later, guys.